call on agrochemical trend, including COVID-19 impact. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. I now hand the conference over to Mr. Deepak Chitroda from Phillip Capital. Thank you, and over to you, sir.
Thank you, and hello everyone, and welcome to Phillip Connect conference call series. So today we have with us management of Dhanuka Agritech Limited, represented by Mr. M.K. Dhanuka, Managing Director, Mr. Rahul Dhanuka is a Director Marketing, and Mr. V.K. Bansal, who is a Chief Financial Officer. Basically, to understand the current agrochemical trend, including the impact of COVID-19. So without wasting any further time, I now hand over call to Mr. Rahul Dhanuka for his opening remark, and then we can start with the Q&A session. Thank you, and over to you, sir.
Thanks, Deepak. Good evening, friends. This is Rahul Dhanuka, Director Marketing, Dhanuka Agritech Limited. I, along with my CFO, Mr. V.K. Bansal, join our MD, Mr. M.K. Dhanuka, on this call and take the opportunity to welcome you on this call. Thank you, friends, for joining in. A quick take from my side on our performance is that till the COVID-19 slowdown and lockdown hit us, we were going full steam, and overall Q4 performance has been good. CFO will be sharing the micro details of the numbers soon. Overall, Rabi has been good for the country, and crop yields and crop status down south in paddy and up north in wheat looks favorable and positive. Upcoming monsoon is also forecasted to be good, so according to me, the kharif outlook is favorable and positive. In short term, it seems it is the domestic consumption of agriculture commodity which is going to drive the demand for agrochemicals. Export-oriented crops have taken a hit in last few days and will continue to have a slow takeoff in few weeks to come till globally the COVID-19 situation settles down. Domestic consumption of food products is stable and is expected to increase, although no recent data is there. However, it seems that the domestic consumption in terms of per capita consumption is not going to come down significantly. Of course, animal feed market might be impacted. However, there is not a favorable assessment around that. Meat and chicken consumption probably would come down, which could reduce the maize consumption, which is a major ingredient for animal feed, which means people might move in for more vegetarian choices and vegetarian options. So maize could be replaced by fruits and vegetables wherever it can be, and by cereal crops. MSP support by the government is very loud and clear, so farmer has a good choice to sell his product on MSP to the government or would sell to the private players. I think so private players will not be losing the opportunity of doing their part of the procurement in agriculture, because that would be necessary to run the plants, the food processing units. Of course, harvesting has been delayed due to shortage of labor. Labor is not available for doing harvesting or vegetable picking in many markets. That is a cause of concern for the farmer. Harvesting could be delayed, and this delay in harvesting could have some impact on kharif sowing. And I will talk about it a bit more later. Liquidity, cash flow is going to be a challenge in the market because of this lockdown. Money flow has slowed even in rural markets. However, various initiatives taken by the government in terms of putting cash in hands of the farmer, direct benefit transfers, and other measures taken for supporting SME and MSME will help money circulation getting restored sooner than later. It is this restoration of money circulation which will eventually boost all businesses and agriculture and agrochemicals also. At Dhanuka, we help the food and nutritional security of the country. And I think so, even in these testing times when the country is impacted by COVID-19, the food and nutritional security will hold utmost importance, which is also pretty evident from the fact that the government has incorporated food, fertilizers, seeds, and agrochemicals in essential commodities. And it is these facilities which are being offered are opening amidst of lockdown. So that being important for the country, I think so agriculture will be back on track pretty fast. Talking about delayed sowing, the primary kharif crop which comes first, very importantly, is cotton. So probably some sowing of May could be delayed by a couple of weeks, but that won't impact cotton significantly because cotton is a hardy in the summer crop. Only in highly irrigated areas, farmer goes for early sowing, which is not really recommended because it causes insect attack. It causes increased insect attack. So this delayed sowing will not negatively impact much in terms of cotton acreages or cotton yield. However, cotton acreages might come down depending upon the global demand of cotton yarn or fiber. If it moves into a discretionary spending, that could have a spiraling slowdown impact in short term. However, wheat, pulses, sugar, fruits and vegetables, and all domestic consumption would hold the agriculture as in a strong position and will also lead the economic recovery of the country in short term. At Dhanuka, we run almost a rural FMCG model. We are significantly geared up to service our trade channel and eventually the farmer as soon as the lockdown opens up across the country. As I talk, we have more than 81 consignments which moved out of from our facilities about a week ago. And now with the relaxations offered by the government, these consignments are reaching their destination. Our warehouses are opening up for a few hours and shops in the market are also opening up for a few hours, resulting in movement of agrochemicals in short term. With that, I would request all of you to be safe wherever you are and pray for safety for everyone around you. Thank you. And handing over the call back to you, Deepak.
Thank you. Now we can start with the Q&A session.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Varshit Shah from Emkay Global. Please go ahead.
Hi, sir. Thanks for the opportunity, and first of all, wish all of you are safe during these challenging times. So my question is is more around the supply chain. So what we understand from my understanding from the channel is that at least the imports are on and the ports are working and the materials are delivered. Now I know that you will of course be procuring some raw materials from China and some of it is locally procured. So what is the status there in terms of making your products available in the market at the right time during the kharif, assuming that we can move the products before kharif? And that's my first question.
Hi, Varshit. This is Rahul, and thanks for your question. You got the piece right that a lot of material has already moved from China earlier, and our customs is working overtime to clear these consignments. As of now, as I understand, though the custom is supposed to work probably 24/7, a lot of export consignments are facing challenge. Almost anything which gets exported from India is facing some challenge, and so are import consignments. They are coming in relatively slower. Once these consignments they move in, then processing them in our formulation units is not going to be a tough task, and then delivering them back to the market is going to be easier. Now, as of now, the supply chain would involve basic technical grade material, then intermediates, emulsifiers and solvents. The supply chain will also include the manufacturers of duplex boxes, paper labels, corrugated boxes, HDP in PET bottles, and so on. The entire supply chain is practically in a shutdown mode, so which is going to cause the delay in restoring the ecosystem. Our plants in this period, normally in Feb, March, April, they are stocked up with off-season production technical material as well as a lot of packing material. So while the plants have been in shutdown mode for the month since lockdown happens after 22nd, we are hoping our plants to get activated soon, and they have sufficient raw material and packing material to run for a while. After which we will be dependent on our supply chain to get active and get active faster, so that we can churn out the protection chemicals to the farmer.
Sure.
May I answer your question, Varshit?
Yeah. So Rahulji, thank you so much. That's bang on. So maybe if I would just follow up on that. So what I understand is we have some stock of technical and packaging. So probably we can move something in the interim, but then I think maybe a lockdown beyond say 15-20 days in the April probably could then cause disruption, and the supply chain has to be restored before that. Is my understanding correct?
Okay. So for Dhanuka, we had, as I shared with you, 81 shipments waiting in transit. As these shipments they reach their destination, they will activate the consumption. Now the consumption itself is in a slowdown mode for a while. Incidentally, as you might be aware, wheat is ready for harvest in North India and Central India, and paddy is ready for harvest in South India and East India. Agrochemical activity is at its minimal as of now. Fruits and vegetables and sugarcane, and there are very few crops which are active as of now. So yes, pocket by pocket, farmer is in need of crop protection chemicals. But otherwise, for all practical purposes, we take March, April, and even May as the off-season period. So talking about economic numbers, I don't think so. Our business would largely be impacted, assuming that we will be up and running soon after the lockdown. So lockdown is till 14th, and even for next 10-15 days, if it takes our supply chain, our indigenous supply chain to activate, it will not cause any problem or any disruption to our channel and our farmers in sourcing the product. There will be sufficient in the pipeline.
Right. And just in case if it takes longer than the domestic supply to resume, can you substitute that with the imports, maybe with a slight hit on the margin, but it can keep our engine running? So at what point will you have to decide that? Is it middle of May, or still take that call at the end of the May? I know it's a tricky question.
Regarding what?
Yeah. So what my question is that whatever you procure domestically, I think you will also have the option to import, right? So it will be generally be a choice between either import or procure locally. Assuming that the local supply chain takes a little longer time, will you be open to importing it and still get your stocks ahead of the competitors in the market, or you think you have sufficient time even if the domestic supplies ramp up by say middle of the May?
I think so. At Dhanuka, we are really well placed when it comes to the supply chain of technical grade material, either imported or domestic. That is not something I'm worried about. I'm more worried about the SMEs and MSMEs as ancillary units servicing us. So technical grade material is not a concern as far as I see.
Right. So
Dhanuka, short term, in the period defined by you, it is not a big concern. The bigger concern is the SMEs, MSMEs, the ancillary units activating themselves.
Sure. Thank you, Rahulji. I think I'll get back in the queue.
Thank you, Mr. Shah. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Levin Shah from ValueQuest. Please go ahead.
Yeah, sir. Thanks for the opportunity. Sir, firstly on this, how are we placed in terms of our raw material procurement? So are we able to get material from China or from other regions where we are importing?
I lost you in between for a few seconds. Could you please repeat?
Yeah, sir. I just wanted to know about our raw material situation or procurement currently. So are we able to get material from China and from other markets? Are we basically able to import raw material?
Thanks for that question. And I'm very sure if my distributors, my channel partners were listening to my answer, they would be extremely delighted. At Dhanuka, as you know, we run an asset-light model and we are a debt-free organization. We normally use this period for procuring the material and raw material in off-season and also pack them in our production units. So that's what our factories were busy with as the lockdown happened. So we really have good stocks of the raw material available with us in short term. Supplies from China have restored to a great extent and shipments have started happening from China. A lot of our material which was already in pipeline is landing at ports and is in the process of clearance from customs or is in the process of transport from ports to our factories. And it is this transportation which is taking more time than the actual supply from China. Apart from China, a lot of our supplies, our specialty and key products were coming in from Japan. Japan has not gone in for any kind of a shutdown. It's only Tokyo where they are controlling or restricting the movement. Practically all other prefectures of Japan, all other manufacturing units are under operation. And we are expecting all our Japanese products to come to us in time and complete quantity. And we are hoping to have a good business opportunity with all these products. Third element of our supplies comes from the domestic manufacturers. So domestic manufacturers which were impacted by shutdown will take their time to restore operations. You must be in touch with many of them. And I'm very sure as soon as they restore operations, we will benefit because of our relationship with each one of them and the being a good paymaster also. So in 4 parts, I have sufficient inventories in my plant. I have sufficient inventories in pipeline from me to my channel. I have sufficient inventories coming in from China and from Japan. So I'm left only with the concerns on domestic manufacturer. The picture will become clear in another week, 10 days.
Okay. Sir, and this was on the availability front, but if you were to see prices, so how have the raw material prices moved recently? So we had China shut down last month and the month before that. So has that in any way impacted our raw material prices?
Raw material prices are probably at an all-time low or sinking because of heavy inventory pile-up in China. They had their material available, but the transportation was the first thing to get hit. So raw material prices are not going up. Subsequently, crude prices got a hit, which is the basic raw material for almost all chemical products. So that is not going to help increase the raw material prices. So I don't see any raw material prices increase. However, some traders might be using this opportunity to make a quick buck in short term and a short while. So something in terms of real emergency would only see a price hike, which would be very temporary and very localized and case to case. Otherwise, in general, no price increase.
Okay. Sir, and one last follow-up is on this. So if you were to see the current situation, if this lockdown continues, let's say till the month of, for the entire month of April and maybe into May, worst case scenario, so then how will this impact our demand? Or if in the current state of lockdown, if this continues, will we be able to maintain our growth, or there would be some issues transporting the material to the last mile?
See, last mile connectivity in this peak lockdown, government has allowed agrochemicals. So the supply chain is just stabilizing to that opening. I don't see that government can take any chances with agriculture. And we all know the adage, everything else can wait, but not agriculture. So I think so after health, after basic food, it is agriculture, which has duly received government attention, which has duly received logistical attention, which has duly received all the support from district and state authorities. I don't foresee the last mile connect being a challenge.
Okay. So do you mean to say that if there are, let's say, normal monsoon this time around and situation stays as it is, we will be able to grow, or basically there would be some growth in the industry as well?
Absolutely. And what I would do is, I would request my CFO, Mr. Bansal, to take on this question a bit and also explain our situation and our understanding on the numbers. So, Deepak, can we request Mr. Bansal to take on that one and more details?
Yeah, for sure. So you see, if the monsoon is normal and the lockdown is extended for the, say, by April end or May end, so we are sure growth would be there definitely.
Okay. Right. Okay, sir. Thank you. I'll come back in the queue.
Thank you. Mr. Chitora, would you like to proceed with your questions while we wait for questions from participants?
Sure. So basically, sir, I have two questions. One is obviously on the COVID-19 impact. Basically, you talk about a lot on the supply side of it. But what if obviously so far we haven't seen any spreading of COVID-19 in the rural area so far, and that's good part. But what do you see in the worst case scenario if this basically extended towards the rural areas? So what kind of an impact it can have on the demand side? And of course, if you see a lot of migration has happened in terms of the workers in the rural areas. So do you think it can have kind of a negative impact on the agrochemicals because ultimately always we talk about labor shortages and high labor costs and all, right? So this time there will be a plenty of laborers available in the rural area.
So the last part is there will be plenty of what available?
I'm saying labor shortages will not be there because you have a lot of people being shifted to rural areas.
Absolutely. So this migration has happened at a very cusp of peak labor demand because harvesting is a key activity. Wheat harvesting starts from central India and comes up to North India, and paddy harvesting of Rabi paddy in South and Boro paddy in East India is about to start in a couple of weeks, and they will need a lot of labor to do this harvesting. So this labor migration away from the heart of Punjab or Haryana back to UP and Bihar will create labor shortage in Punjab and Haryana, and of course excess labor in UP and Bihar and Chhattisgarh. So labor shortage would be happening in the hearts of Madhya Pradesh or in heart of Telangana or Godavari, where the labor would have migrated to their hometowns, which are relatively poor in agriculture, which means the labor has migrated to Chhattisgarh or Odisha or Bihar, Jharkhand and UP. So there we will see excess labor, and in some states we will see shortage of labor. A lot of mechanization has happened. So in North India, largely we see combines for harvesting wheat, but still farmer needs labor to manage the whole situation. Now these combined harvesters will be operating in central India and then moving to North India for harvesting wheat, so that might not be significantly impacted. And similarly, we have harvesting equipments coming in for paddy harvesting, but it is still significantly labor intensive. So those are mixed challenges, and how the dynamics will work out, I'm not too sure. Increased offering on Manrega is another dimension which comes in. So how this is going to impact with the migration of labor? There are too many variables at play.
Sure.
And each of these variables will have a social, economic and agricultural impact. It will be too early for me to peg down and look at each one having its impact. So Manrega offering has gone up, which should ideally make labor availability difficult and which can ideally increase the weedicide consumption significantly. So I do foresee weedicide consumption going up for this year and in upcoming paddy season for sure because of not available labor in the short term. And again, we are really well placed with our Tretellachlor offering in paddy, with pyrosulfuron from Nissan. So we are really well placed for paddy. And in sugarcane, we'll have Sempra to take on with sugarcane weeds. And amazingly, farmer has come down in the middle of lockdowns, requested for the shutters to be opened and taken up weedicides in this window because they don't want to go ahead with their sugarcane sowing and sugarcane growing up where they cannot control their weeds. So this is going to be a mixed thing, and I would request for prayers that this settles down quickly.
Sure. And second question, sir, is on the quick takeaway from your side about the pesticide management bill that was announced last month or so. So if you can just highlight what kind of impact it can have on the sector per se.
So pesticide management bill is increasing the regulatory norms around all the agrochemical producers, which will actually make it difficult for the fly-by-night operators for fake and spurious products to claim the market. My audience would appreciate any law is only as good as its execution. So it is the execution which will really matter. It has been given a lot of teeth. However, a lot of delegation is being done to the states. Now that has been a challenge. Agriculture has been a state subject, however the regulation was central. After passing on this authority at the state level, I foresee execution all the more slower or difficult. If that doesn't happen, if the execution is true to the spirit, then this is going to boost the business of companies like Dhanuka, which invest in brand building, which invest in farmer education, and companies like Dhanuka which invest in creating brand equity over a longer period.
Okay. Thanks, sir. Thanks.
Thank you. We have the next question from the line of Madhav Madha from Fidelity Investment. Please go ahead.
Different question. This on the Orchid Pharma, if there's any update that you could share with us in terms of the promoter pledge, in terms of what's happening there?
Yes, I'm happy to inform the audience that on 31st March, that is yesterday, Dhanuka has made the complete payment, and from today onwards, now the Orchid Pharma belongs to Dhanuka Group.
I'm sorry, sir, belongs to Dhanuka Laboratories?
Yeah, Dhanuka Laboratory is also basically not the part of Dhanuka Agritech Limited, but group is same. So
Right.
now Orchid Pharma will be controlled by Dhanuka Laboratories Limited.
And in terms of the promoter pledge, does that get released anytime soon, or what's the thought in that?
Pardon, your voice is not clear.
So I'm saying that the Dhanuka Agri shares, the promoter pledge, does that get released anytime soon?
Sorry, there is disturbance in the line.
Yeah, I'm responding. You see, there is no pledge of the shares towards this loan. However, we have placed certain shares towards the bank guarantee, which is going to be released in a day or two. So therefore, the pledge of shares will be released with regard to the bank guarantee given to Yes Bank.
Okay, got it. Okay, sir, that's the only question. Thank you so much.
Thank you. We have the next question from the line of Virat Acharya from Securities Investment. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just have 2-3 questions. First is, what is the inventory in, either with us or in the channel, the overall, or the industry inventory as of, 30th March?
Ideally, industry goes for some inventory provisioning in March end. So I think organizations would have missed that opportunity. At Dhanuka, we hardly do any placement, so we do not have significant pipeline inventory. like I shared earlier, we had 81 shipments waiting from our plants or zonal warehouses moving into some of our customers or branch warehouses. So I think so almost all the companies would have their inventories stuck at different stages of logistics and supply chain.
Okay.
And China thing happened way back in January. So that would certainly cause some inventory constraint in the ecosystem for March and April requirements. However, we discussed this in February con call also, that this is not a high consumption period. This is largely off-season production and inventory building period. So I think so technical inventory and raw material inventory should not be a constraint in the industry. Finished goods inventory would be a constraint due to shutdown of the plants. And assuming that we'll be opening and up in action pretty soon, it will not take industry a lot of time to build up finished goods stocks and move it quickly to the market. At Dhanuka, we have 3 formulation units at Keshwana, Udhampur and Sanand. And at all the 3 formulation units, we will be up and running pretty soon and really fast, and we'll be able to service our channel and our farmers really quickly.
So my question was actually, if you look at a year back, the industry, including us, were kind of saddled with a lot of finished good inventory in the market. With the monsoons being good and the liquidation also being good, I was trying to get a sense in terms of how much inventory is there compared to a normal demand environment, how much more or how much less the inventory is now in the system. So compared to last year, significantly. More in a normal scenario. Yeah. Pardon?
As compared to last year, significantly lower inventory in the pipelines at all stages.
Okay. And second question was related to the pricing. Since the inventory is being low and the supply chain, I do understand that the key consumption period is still not kicked in yet for agriculture, because it comes much later in the cycle, the agri input chain. But given the inventory is relatively lower, the supply chain is probably trying to get back. Is there, now companies are better able to hold on to the prices, so the kind of low raw material which we are managing to get, there's no really compulsion to actually share with the market, or, just trying to understand how should one understand the pricing part of this?
See, there was a short-term blip, or, I would say a short-term blip we can assume from mid-March to mid-April, where the inventory constraint would certainly be felt. However, if we consider the backward chain, that material coming in from China, or China as the chemical plant of the world, would not be raising prices. In fact, the government has doled out subsidies, export subsidies in China. Then a lot of liquidity has been pumped into the ecosystem in China. And there is a lot of logistic facilitation being done, which comes on to say that with the crude prices going down and subsidies in place, the global factory, which is called China, will not be increasing prices. So any northward movement of prices, if at all, could be short-term or product to product. It cannot be generalized in terms of prices going up.
Okay. And last question was on other agri input chain, especially say seeds or fertilizer. So if there are seeds, the production usually happens a year in advance, the planning and everything. And it's usually largely localized. So are we seeing any impact in terms of availability, say, of seeds at the farmer level in major crops like cotton, rice or maize? Are we seeing any issues on those parts? Yes?
Yes, absolutely. So seed outreach pocket to pocket has been slow, and farmer has not got access to seed in many markets for a while. However, this is not exactly the time of cotton seed sowing. Cotton seed sowing earliest would be happening in mid-May or later, and about 15-20 days of delayed sowing will not impact cotton acreages, will not impact cotton yields. Fruits and vegetable seeds, especially the cucurbits in this period, muskmelon, watermelon, cucumber, tomato, and other fruits and vegetables which are sown in March and harvested in this period of March and April, these fruits and vegetables will certainly be hit in terms of availability of their seeds, availability of labor, and availability of the freedom to move around.
Any color on rice and maize as a product?
Rice
and maize.
Rice is normal. Rice shouldn't be seeing any challenges. This is largely harvesting time in South India and East India. North Indian rice sowing will be coming up in June. The Punjab and Haryana government have normally imposed restriction of not starting transplanting before 10th of June. So we have sufficient time for rice sowing to happen. Maize sowing has taken a hit in some pockets, somewhere due to seed availability, somewhere due to maize prices going down. Earlier, at one point of time, they had touched 2,000 rupees, and now in some markets, it's 1,200 rupees a quintal. Maize prices have gone down. Maize seed availability has been hit in some pockets, and maize acreages might overall reduce.
Okay. That's all from my side. Thank you.
Thank you. We have the next question from the line of Ashish Thakkar from Motilal Oswal Asset Management. Please go ahead.
Yeah, sorry. Thanks, and sorry I got into the call a bit late. So on our in-licensed portfolio, would that get impacted because of this logistics issue?
In-licensed portfolio.
Yeah.
The products which we get from various multinational companies. So Japan, as I shared earlier, all the prefectures of Japan are operational. Offices are on, factories are on. We are expecting very normal supplies of Charga, of Campa, of all over Japanese products. We are expecting really normal supplies. And other in-licensing products which come from Europe or America. Till our discussions way back in first week of March, the insight was that the supplies would be slow because of the China being hit in terms of, however, China now pulling along. I think so supplies could be delayed, but would be restored before the kharif starts in June, July.
Okay. And sir, what is the capacity utilization at our factories currently? And supposing on April 14th the lockdown gets withdrawn, then how quickly can we ramp up?
Right. So I would request my CFO, Mr. Bansal, to take on both the questions.
Yeah, you see, it depends upon the availability of the labor after the lockdown is over. Normally, we run 2 shifts during season, but however, we have the opportunity to run the 3 shifts. So we can really pick up everything very quickly, but it depends on the availability of the labor, basically. That could be a problem, little bit.
Okay, but the capacities are now down currently as on the ground, like.
Currently, the factory is closed.
Okay, and you expect. Okay, and you expect by April 14th the lockdown will get over.
Yeah, you see, it is a very difficult question. Everybody is expecting the lockdown could be extended, but since this issue, agrochemical pesticides are coming under the essential category, so we are hopeful our factories would be operational by next week, by Monday probably.
Okay, by Monday. Okay, the government has already put a notification, right, that these are essential in nature?
Yes, already it is there.
Okay, great, sir. And so, assuming that everything by next Monday, the permissions are on and the capacity starts taking place, for the FY21 fiscal, seems the monsoons were also very good, and we are expecting a good kharif season. Broadly, what kind of industry growth do you anticipate, and what could be the growth for our company?
You see, for industry and our company, growth should be in double digit. But you see, the government has declared this agrochemical or pesticide under essential category. But thing is that still the transportation is not started fully. Until unless this transportation is fully available, things will not move in that speed which we need actually. But however, because of the prediction of the normal monsoon, we are hopeful the industry growth should be in 2 digit between 12-15% type. And Dhanuka definitely should be more than the average industry average.
Okay. Great. And as far as the raw material dependency is concerned, how are we placed? Are the prices of the KSMs now okay? And
could you repeat your question, please?
so on the raw material availability, how are we placed now?
Yeah, raw material availability, as our director marketing already shared, by and large it's okay because China has already started. And as far as technical availability is concerned, we are sure that there should not be a difficulty. But however, once the lockdown is over, we can face some difficulty with regard to some packaging material supplies.
Okay. So in other sense, the lockdown remains very crucial for the entire agrochemical industry, and the sooner it opens, the better it is.
Yeah, for the entire country, for all industries, yes, it is very crucial.
And you believe the government is cognizant of this fact, right?
Yeah.
Okay. Thank you so much, sir, and all the best.
Thank you.